getting that going. And if you have a 401k, you can also transfer that for free right now. The only thing you're gonna have to do is pay taxes on your 401k. But this is a really lucrative environment just because of the CARES Act that Congress passed. You can now liquidate your retirement account without penalty up to $100,000. So that was not there prior to the CARES Act. So definitely take that into consideration if you have a 401k. So like we said, we want to get that Roth going, and we also want to get our individual account going. Brennan's going to talk to you about some different trades you can make in your individual account. Some index funds that I'll recommend for you today for your retirement. Let's start with QQQ. I know I mentioned it last week. QQQ is the NASDAQ 100. That's going to keep you invested in tech stocks. I think moving forward, we're still going to have a lot of volatility because of what's going on in response to COVID-19. So you want to be invested in something that's going to prosper while we're all at home and suffering from quarantine. So definitely look at QQQ. Right now it's going for $212 a share. I think that's going to drop to around about 200 this week. If you can get it at 200, I would buy as much as you can. And then if it goes lower, just keep reinvesting to get a strong dollar cost averaging. After that, another one I recommend for you guys is BOTZ. It's BOTZ. And that's actually an index fund that tracks artificial intelligence. It's going for $19.84 a share. This is a index fund that might be worth thousands of dollars one day. As long as you invest for the long term, this is going to do you well. Artificial intelligence is going to be huge moving forward. All of the big companies are investing in it. So I think this is going to be a good investment for you guys. Just remember to keep investing monthly. You know, you want to drop that price that you're in, and consider FANG stocks. You know, Facebook, Amazon, Google, Netflix. These are all really good stocks to look at. And you also want to look for a strong dividend because even if you own these stocks and they don't perform particularly well, you can still profit off of their dividend, which is going to be important for you moving forward. Does anybody have
their dividend to be?
So it depends what your goal is, but if you can get, you know, $1 a share, that's phenomenal. But even more than that, I know before Boeing had these problems, their dividend was $8 a share. So think about it. I mean, if you own 1,000 shares, they're going to pay you $8,000 a year just to own their shares. That's not including how much money you make off of the stock itself. So definitely keep that in mind. A lot of companies are suspending their dividend right now just because of what's going on. They need more capital to fund their operations. But if you can find a company that has strong dividend, I would consider it. A lot of oil companies have good dividends. ExxonMobil has a pretty good one. It's about $6 a share, so you can look at that. I don't know any other companies that have really good dividends. Brennan, do you know of any?
Before you get into it, can you view iPhone? Because it's kind of distracting.
Perfect. Yeah, Brennan, do you know of any good dividends out there?
No, you nailed all the major ones. Trying to think of a couple others that are pretty good. Like AT&T gives an okay dividend. A lot of the ones that have been around forever, can give a dividend. That's more of a buy, hold, set it, and forget it kind of strategy, which isn't kind of my MO. I like to be in a little bit more of the trades, but yeah, you nailed most of the ones that I'm aware of that do dividends.
Cool. Yeah, so obviously Brennan, is very liquid right now, so he's looking to invest big and make big trades. For you guys, what you want to do is you can take both the long-term outlook and the short-term outlook, combine those two, and you're going to have a lot of success in the markets. It looks like this upcoming week that we're going to have a lot of volatility. The Dow futures are already down 300. So to me, this is probably a good idea to start tracking the graphs, seeing what you want to invest in, and preparing for your future outlook. For me, I'm going to invest in the index funds I told you, and I'm also keeping track of one medical stock called Gilead. Gilead actually reported that it has a potential vaccine for the coronavirus, and the stock shot way up. I was talking to Brennan about it. Brennan, were you going to make a trade? What was it, Friday?
Yeah, I had a bid in trying to get some shares, but I didn't get filled.
Yeah.
It's a bummer.
So you want to keep a lot of investment information up to date. Like every day, this is changing due to COVID-19. But if there's a medical stock out there that's going to get positive reviews, that stock's going to go way up. So just keep that in mind when you're investing in the markets, especially in medical stocks. Does anybody have any questions about anything I talked about last week before we get into what Brennan's going to talk about?
Yeah, Vinny, I got a question.
What's up, Mike?
When you invest in a stock and say you bought a stock for $30 and then it drops down to like when do you rebuy? Like I know you guys said when it drops down, say to like 25, you usually like $5 more, you buy more, so then the I guess the price evens out. But exactly how low? Like if you bought a stock for $30 and it drops down to 20, are you buying stocks, or is that just not even worth it?
It depends what the stock is. If it's a stock that I believe in, I have good information and knowledge that it's going to improve over time, and I believe that that's going to be something that's profitable, then yes, I'll buy that low and I'll bring my dollar cost averaging down. However, if it's a stock that there's a lot of bad information out there, there's potential that it's going to go under. I think last week I referred to JCPenney, any retail store like Macy's that I just don't see a long-term outlook that's positive, I'm probably not going to rebuy that stock. Just because I think the future of these companies is going to move online to companies like Amazon. They're going to eat them all up. You know what I mean? So in that regard, I would ask you to look up the information, see what the charts look like, see what the news says. Fortunately, you can also ask me or Brennan, anybody that works here that has knowledge about it. You don't have to go to a financial advisor. A lot of people spend a lot of money on financial advisors. And it's crazy because you can get all this information yourself. So yeah, that's what I would do.
And for long term, are you considering 5 years or 10 years? What do you consider long term?
So for me, I'm considering 10 years at the least. 27 right now. So big picture for me is investing long term. However, a long term stock can be anywhere from 3, 5, 10 and on. So it's really up to you and what your financial outlook is.
What was that name of the stock, Ben, you just said?
The retail stocks or the ETFs?
No, the medical one, I think you said, or the one that.
Oh, it's Gilead. I don't know the ticker for. I think maybe GILD.
Yeah, GILD. Yeah.
Yeah, it's going for like $79 a share, but the futures are already in 81, I think.
Awesome, thank you.
Yeah,
no problem.
So let's look at Gilead. I'll pull that up for everybody here. Let's take a peek. So, all right, so let's look at Gilead. So if you're trying to figure out whether or not this is a good time to buy or not a good time to buy, we're going to zoom this way out. So first thing to note here on my chart is we are looking at a weekly time frame. So that means that each one of these little bars that you see on this graph represents 1 week of history. And this is a 10-year, I'm looking at the 10-year chart for this particular stock. So this is what it's done in the last 10 years. So 10 years ago in 2011, this was $20 a share. Today is 81 a share. So, you know, if you were a buyer back here in 2011 at $20 a share and you've held on this entire time, you've 4 times your money. But one of the things that I want to show you just from a technical analysis standpoint is who here recommends or remembers, who can identify what this chart pattern setup is? Can anybody take a stab at it?
A pennant or something like that.
Ooh, that's pretty good, Colleen. Yeah, this is a pretty delicious bull flag. And let me show you how the flag is created. So you just take this little trend line here, take the top of the flag, which is right here. You're gonna come straight down, touch the lines. See how it makes a nice little flag? Here's my flag pole, which goes up. And then here is the flag setup. This is a pretty sexy flag over the last 10 years. So if you were looking at the ideal perfect place, like if you would ask me like, yo, where is the best place to buy this? That would have been on the breakout right here, which was on February 10th, 2020, which would have been a buyer right here at 65. And because this entire flag took 10 years to form, I mean, if you look at this, this is a 10-year time window, that there is a good chance that we are looking at the beginning of another flag pole. So usually how these things work is you have a flag pole, you have the flag, and then when you break out of the flag to the northern side, see how we're headed up here? That usually is an indication that we're going to be at the beginning of another flag pole, which will extend. Let me shorten this down. If I had to guess, if I'm looking at this from a long-term perspective, another flag pole up here in the 180 range seems like somewhere I would target as my sell. So you could be a buyer, if you caught it right down in here, you could be a buyer right around 66, 67 bucks. And, if you're willing to wait it out, which, 1, 2, 3, this may take 4 years to form. But if it does, there's $100 per share upside in the next 5 years, just from a straight technical analysis standpoint, just the way the chart is set up. And then fundamentally, if something changes with the company, meaning that, they get a cure to the coronavirus and they're able to sell, hundreds of millions of vaccinations or whatnot. I mean, you could be looking at something that, at $81 a share overnight, this could rocket up to 180 overnight. So that is called a bull flag. I look for bull flags to gain entry into a stock, but I look for something that happens on a daily for more of a short-term trade. This, like I said, we're looking at a 10-year time frame. So this isn't something that you would be buying and then selling the next day or the next week or the next month. Because this took 10 years to form, another 10 years will create a nice breakout. So this is probably a pretty safe stock to buy if, in the long run. But if I was looking for a trade, so now let's talk about what I was talking about with Vinny. So now I'm gonna move this chart to daily, and we're gonna look at just the last. Let's look at the last 100 days. So Vinny and I were talking about this stock, and you can see it's had some really big volatility if you were trading it. But the general trend, so I want to show you, this is called a channel. What we have here is a channel because we have multiple bars creating a nice upward channel. Higher highs and higher lows is what you want to see if you're a buyer and a holder here. So we have this channel, which hopefully you guys can see, which means that this is pretty simple to trade, matter of fact, because it's really easy. Because you're trading in a channel, you're just going to want to be a buyer at the bottom of this channel. So I told Vinny, we were talking, I said, I'm a buyer at $76. He can go back and look at the text, which would have been right here, which is where I actually had an order in to buy shares at 76. And on Friday, we only came down to $77.50, which I was super bummed about. But you see, the reason I came up with that number was because the entry would be right here at the bottom of the channel. And then I would hold out for a few days and then probably be a seller somewhere around here, around 88. So you could be a buyer at 76 and a seller at 88, and you're a big winner if you just knew how to play this channel, which is pretty simple. And then obviously if I was buying at 76 and we had some sort of a downward move here around 75 or 74, I told Vinny the line in the sand for me is 75. If we hit $75, I was going to be out if I had gotten in at 76. So you're in at 76, you're shooting for 88, and if you're wrong, you're out $1 from 76 to 75, and that's how you're able to protect your gains. That's a low risk, high reward setup. So any questions around what I just covered right there?
Yes.
Fire
Brennan.
shit right there. They don't teach you that in school.
Nah. I saw the previous graph with the bull flag. It's very similar. What is that? It is very similar to the bullish. How can you distinguish and identify which one is what? Because I was about to tell you it was the bullish, but it turned out the bull flag. And I see that the bull flag has parallel lines while the bullish has a reverse, is going with reverse instead of going like the bull flag. How can you identify between each one?
Yeah, that's a good question. So to know which flag you're looking at, you want to look at the direction of the flag pole, which will tell you what kind of setup you're looking at. So if I go back here, let me go back to the weekly time frame. Let me share my screen again to show you here. Weekly, 10 years. Yeah. Okay. So you see the, are you able to see the northern direction of the flag pole? So because the pole itself is headed up, it's creating a flag, which means that any break through this diagonal line up would be what's called a bull flag breakout. Now, if let's say it tried to break out right here and it couldn't get through and then it actually came down, well, now we have a failed bull flag. And this is actually be a stock that I would be looking to short, which we'll talk about shorting later if that were to happen. But then if it broke below this line here at $60.60, I would not be buying in this area because there's a good chance that this thing would head back down and you'd be a sucker for buying down in here because you've purchased below the flag breakout. But because we broke out of the flag to the northern side here, this was a really safe entry point to get into this particular stock. If you were a buyer right here, you're gambling. If you're bought at 65, you're gambling because it hadn't gone through the flag in either direction. So it's, you had no idea. But as soon as we have a breakout here, that's when you knew it was okay to be a buyer right in that area. So to answer your question, it's the direction of the flag. I could show you a bearish flag, a negative flag, if you wanted to look at a negative flag.
Okay.
You want to look at one of those? All
Yeah.
right. Let me check out some stuff that had been trading. Let me see here. What is a really good negative flag that I can look up? Let me think.
Is it the E-Trade that only has 10 years for graphs for the stocks? Because I don't think Fidelity has
Yeah,
up to
you can
10.
get it from Fidelity.
You can get it?
You probably can. What I'm showing you, I pay for. It's called E-Trade Pro. It's like their super trader next level software. I pay like $100 a month for it, or $100 a year, or something like that.
Okay.
Uzi, you have to look at the advanced chart.
The advanced chart. Okay. Okay.
And let me see, I want to find you a nice textbook bear flag, like a really beautiful one that you're like, oh, okay, that makes sense. I will find one.
Brennan, what was the name of the flag you just showed us?
That is called a bull flag.
Bull, okay.
Bull, B-U-L-L.
Would Boeing be an example of one right now? I mean, to me, it looked like kind of like a symmetric triangle, but I don't know.
Yeah, so a bull flag is just generic. If I'm getting more specific, that was a pennant flag specifically.
Okay, thank you.
Yep. So I like looking at these charts. Okay, here you go. CCL is going to be a good one. Carnival Cruise Line, I can show you something. Took me a second to find a bear flag. Okay, let me punch this bad boy in. CCL. Okay, so let me share. Okay, let me just show you a bearish flag. Okay, you guys can you all see my screen? We're good?
Yep.
All right, here you go. So you have, this is a Carnival Cruise Line, which this stock got absolutely hammered. All the cruise lines did with coronavirus. I mean, some of these people are buying this at $51 a share, and this came all the way down at one point to almost $6. So Carnival or your cruise lines are in a pretty tough situation. A lot of people are buying cruise line stock. I am not. I think there's just not a lot of people that are going to flock back to getting on cruises, especially all that horror stuff. But nonetheless, let me show you a bear flag. So there's my flag pole, and then here is my flag. See that?
Yeah.
So that's a bear flag, Uzi. And so what a lot of newbies do is it came down here, right, around $6, and then all of a sudden it went all the way up to 18. And if you can't identify this flag, you're thinking, oh my God, it was at 6 and now it's at 18. I better buy because it's on its way back up. But
it's a downward trend.
It's a downward trend, exactly. So as soon as the stock, if you look right here, broke through this flag down, it saw much more downside. It went from 18 to 16 down to 14, 13, 12, 11, and then look at that. 1, 2, 3, 4, 5 days later, So you could have been a buyer on Monday here at $18 thinking, oh my God, I caught it, on its way back up. But really, if you had just waited 5 more days because, you recognized the pattern, 5 days later, instead of buying at 18, you could have been a buyer down here right around $7. And today it's at 14. You could have doubled your money just by being able to figure that out. So one of the reasons why the price reversed right here is because now we're learning about support levels. So prices have memory. And if you look, the lowest price, when this came down this huge downward channel, for whatever reason, it decided to stop right here at a little less than $8. Looks like $7.95. Well, wouldn't you know that when this bear flag broke and it came back down, look where it wanted to park its little happy ass. It turned around right there at $7.90. So that would have been a perfect place to be able to buy this stock after this trend, because there was a level of price support right here. Because wherever the price touches and then reverses becomes a level of support, which I could just show you here. Bang, with that little line right there. That would be the level of support. And then it just, like a ping pong ball, came down, boop, hit the floor, and then bounced right back up.
Beautiful.
Yep. This shit's easy once you figure it out.
Brennan, what causes that little support, that little bump exactly?
Yeah, so we would have to look way back on this chart. I don't know why that price decided to stop there the first time. The second time I know why. This time makes sense because that's where it stopped the first time. So this would have been a good guess as a place to buy. But when something was at 51 and then, it came all the way down here, I have no idea why it stopped right there. I got to go back in the chart. I may have to go back many, many, many years. I'm going to go back 10 years, see if that makes a difference. No, it's never been this low. Let me look at monthly. Hold on. Look at the last 25 years. Oof. Yeah, there was nothing in the price history that said that this should have been where it stopped. Just based on the chart, it should have stopped. It actually should have stopped right around $14, but it didn't.
So you can usually just tell from like the history.
Yeah, the price, exactly. The history is where you want to be. Yeah.
Okay.
Yeah. And if you look at this stock in particular, this is the last 25 years of trading this stock. Assuming coronavirus didn't happen, like let's just pretend that didn't happen for a second. This was also trading in a channel. If you look at this channel here, this was trading in a channel. So obviously there was some significant event that caused this huge downward move. But let's say coronavirus didn't happen and it just had this nice little like sell-off. A good place to be a buyer would have been right here around $40. And then you just would have put your sell at like 39. And when it broke through, obviously you would want to sell. You'd lose $1 per share knowing what happened. But that would have been a nice little low risk, high reward setup because you could have been a buyer right here. And assuming coronavirus didn't happen, it probably would have just bounced right back up in its trend. So you just use previous price history to give an idea of what you should do in the current moments.
I mean, looking at what you just showed us, it showed back in 2008 it was dropping as well. So I guess, like you said, history does repeat itself.
Yeah, exactly. Yeah, and exactly. So if you look and you saw that was in fact 2008. Well, what do we know about 2008? Well, the whole stock market in general got hammered in 2008. So yeah, that's what you're seeing across the board with almost every stock has gotten hammered. It's just the question is, was that the bottom or is there more bottom out there? And that's anybody's guess. I mean, the Fed has pumped in trillions of dollars into the markets to keep the stock market going. And, they have these SBA loans, which is they're literally paying me to not fire people, like to bring people back. Here's free money. The government's giving me money. So they're doing whatever they can to prevent this, economically from being something that can be, really bad. But fundamentals at some point are going to factor into this. These companies are coming out with their earnings reports and they're ugly. I mean, they're bad. So yeah, it's anybody's guess what will happen. But my money's on us seeing another low. But, I could be wrong.
Brendan, compared to like what happened in 2008, I don't know exactly like how involved you were with this whole like trading stuff, but Are you seeing a lot of the same things happening again, like as far as like the behavior of like them pumping money into the economy and stuff like that, or is it like more of an extreme this time?
I think just one of the big key differences this time around is the banks are in a much better position than what they were in 2008. And the banking system as a whole is kind of like the skeleton structure of it's like a spinal cord of the economy. It kind of keeps everything going. And one of the reasons 2008 was so bad was so many banks just were fucking way upside down. But what makes this one really interesting, though, is that 2008, we did have high unemployment, but not like what we're seeing right now. So it's like kind of it's like a yin and a yang. You know, there's pros and cons about 2008 versus 2020, the coronavirus. I don't know what your thoughts are, Vinny, in comparing the two, but that's kind of what my two thoughts are right off the top.
No, you really hit it on the head. The main difference is the banking system. I think the health of the banks overall is still strong. The Fed did pump in a lot of money into the economy in 2008, but not to the extent that they're pumping in right now. We're seeing historic levels of government intervention right now to save the economy from going under. So we'll see what the result of that is, but right now it's keeping it going. We just don't know how long it can last that way. That's why a lot of states are starting to open up. And I think Florida is going to start opening up this week, outside of obviously Miami, Broward, and Palm Beach County. So hopefully we can get going soon too to recover, but we'll see.
Hey, quick question. Did you mention something earlier about an oil company to look into?
Yeah, you can look at Axon. Honestly, me particularly, I'm a little afraid of oil right now just because it's so volatile. But you can do your research on it because they do have good dividends. And, you know, once consumer demand does go back up, people are going to be filling up their cars with gas. And also businesses are going to be using the oil again too. So I would see a return to oil prices eventually. So it could be a good buy for you. Just be prepared for a lot of volatility.
All right, thank you.
Yeah, oil's nuts right now, man. We were actually at $- per barrel, which means the seller was willing to pay the buyer to take their oil. It's never happened before.
Absolutely crazy.
That's crazy.
Crazy.
Wait, why?
People making the oil, it's just supply and demand. The people making the oil had so much oil that they needed to get rid of that they were willing to pay someone to buy it. And they wouldn't even buy it. They're giving it away and they're going to pay you to take the oil. It's a crazy thing to think about.
That happened because they thought that they weren't going to have any room to keep it, right? They just had nowhere to put it type thing, right? Is that why it happened?
Yeah, exactly. And they were ramping up and crushing production when no one was using oil. Just supply and demand. Crazy supply, no demand.
And Saudi Arabia took advantage of it as well, and they flooded the market with cheap oil. So there's a huge price war going on at the same time while there's no consumer demand for oil. So it's a big mess. But it may get resolved once, you know, people get back to work.
Them Saudis, savage.
And then just a quick
Brennan,
question, like when you showed the last grab with the quick bump ups, like what was the time frame on those bumps?
Do you remember which one it was? Was it the Carnival Cruise Line one that I was showing you?
Yeah, for Carnival.
Yeah, I don't know what caused it, but what I can tell you here, I'll pull it back up. What I can tell you is each one of the lines in this, I'm showing you a 25-year graph. So if you got to put yourself, you got to really wrap your head around it. I don't even think you're fucking 25 years old, right? So, you know, this, what am I doing? CCO.
I'm saying from when it went from like $7.95 to like $18. What was the time frame on that?
Oh, when it went
recently.
from, okay, got you. Yeah, hold on. There you go. When it went from right here, when it was at $7.95 to 18, that took 2, 3, 4, 5, 6 days.
All right, cool.
Yeah. So if you were to, so for instance, one of the things that I do is that if you can recognize that this is the middle of a bounce, and the way that you would be able to identify that you're in the middle of the bounce is, okay, yeah, I'm sharing. So if you look, each one of these, so look at my, I'm looking at a daily time frame. So each one of these bars represents 1 day of trading. And then I'm looking at the last 50 days of the stock. So this was Friday, Thursday, Wednesday, Tuesday, Monday, Friday, you know, you get the idea going backwards. But one of the things that you would have been able to identify that this was most likely in a bounce was that right when we started this kind of downward trend, red means that it was red for the day, meaning that the stock went down. Green means that it went up for the day. If you look at this negative trend, red, 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 green, barely green, red, green, red, green, red, green, red, 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 red. You know, that many consecutive days in a row of red, this, as soon as I saw the first green, and this is, oh gosh, I don't want to give you guys too much here, but this is a bullish engulfing candle, meaning that this is a sign. This candle inside of this candle is a indication of a reversal. I most likely, if I had caught this and saw this soon enough, would have been a buyer probably on this day, and then would have rode the wave until we had a break of that flag, and then I would have sold. And that's a trade. That's just a trade. That's not me investing in Carnival Cruise Line long term. That's just me buying it, holding it for 3 days, and then selling the shit and doubling my money.
So kind of like what you did with Uber, right?
Yeah, exactly. So if you want to see what Uber ended up doing, if you guys went back and watched the video from last week, Uber did exactly what I thought it would do. So if you look, let me put the guideline here. Remember I told you this level $29 was a key level, and that as soon as we broke through this $29 level, I would have been a buyer. I didn't actually buy it, but I would have been a buyer. So you buy it at 29. I told you sell at the yellow line, or sell some at the yellow line, which was $31. We ended up getting a move all the way up to 32. And then as soon as we went back down this $31 level, I would have been all out. And check that out. So we actually hit 31. We actually did hit 32. Came back down to 31. I would have sold everything. And if you look, today, the stock is at $28.34. So it did not hold its breakout. So right here is a Uzi, paying attention. Here you go. This is a bearish flag, okay? So here's my flagpole. And then here is your flag. Do you see?
Yeah.
This is a bearish flag, though. This is a downward trend flag. So what we had here is we had a breakthrough of this bearish flag up, which means, holy shit, this thing's reversing. But just kidding. No, we're not. We broke through for 4 days, and then we're back down. So now actually with Uber here, Uber is not a touch. I would not be touching this bad boy for a while. This is likely going to head back down somewhere in this area. If I were to buy Uber again, I would buy it in small chunks. I would start here, which is at 25. And if you guys are trying to figure out why, see how the price right here hit its head on $25. And then when it came through, it bounced right off of $25 there. And then on its way back down, this is a key level. $25 is a really big level for this stock. I'd be a buyer at 25, and I would be a buyer probably right there at 21. That would probably be where I would buy this if I was looking to hold on to it long term, and then save some money for maybe down here. But that $25 level is most likely where this is going to bounce, if I had to take a guess. It's going to come back down here. It broke 28. It's going to come down to 25. You're probably safe buying at 25, and then I would put in a sell order right around 24.50. If it breaks through your sell, then I'd be looking to buy again at that other level that I mentioned.
Brennan, I got a question.
Yeah.
Can you pull up Tesla for an example and just look at that? Because I looked at it and I saw it drop like tremendously, like over $150. And I'm just wondering, like, someone like you with your experience, like, would that be something you're looking at to pick up, thinking that it's going to jump, I don't know, within this week or so? Like, how do you read that, for example?
Yeah, so one of the things that makes stock trading in particular really interesting is you also got to be aware of like everything else that's happening around that stock. So if you're wondering, so let me share my screen. I'll show you Tesla stock here. So Tesla had a huge like sell-off, right? And you're right. They went from, you know, in the last 2 days, they went from 875 and they bounced all of, funny enough, this bounced off that blue line. No figure, go figure. But anyways, yeah, you had basically in 2 days had $200 drop in the stock. Well, if you follow Elon Musk on social media, Elon Musk tweeted, "I think the price of Tesla is overpriced." He said, "I think my own company's stock is worth too much."
Why do you think he would do that?
Elon is a clown, man. I think he just says stuff just to fuck with people. He just wants to see what happened. He's so wealthy, he doesn't care. But if you were unaware of that, right? Like I follow him on Twitter specifically only to like track Tesla stock, because he'll tweet good shit and he'll tweet bad shit, and you got to be paying attention to that. But he literally tweeted, "I think Tesla is worth too much," okay, and that dropped the stock by $200 a share in 2 days. It's insane. But that makes sense, of course, because if I was holding Tesla and it's at close to its all-time highs, and then the CEO of the company says, "Yeah, I think this might be worth too much," you're damn right I'd be selling, just like everybody else, which is why the price dropped the way it did. So Tesla's a weird one, Mike. Tesla's kind of like going to one of those country bars and having a few drinks in you, and then sitting on the mechanical bull and enjoying the ride. If you can ride it out, you'll do really well if you buy low and sell high. But Tesla's been wild, man. It's been all over the place.
Real quick, Brennan, we've got 2 minutes. What stocks are you looking at this week with all the market volatility coming up? What do you got?
Yeah, a couple ones. So funny enough, I am looking at the cruise line stocks as for trades, and these are not long-term investments. These are just things that I'm looking at potentially trading. Looking there. I am in love with the chart. Let me see if I can get it up here. I know we're running out of time. I am in love with this chart. This is Southwest Airlines. They are a great company. I am liking this for a move north. So Uzi, here you go. This is a really sloppy flag, but take a look. Here is my flag pulled down, and I have some sort of a flag setting up here with Southwest. So I'm looking to be a buyer down here at this level. So you guys could all play this one with me if you wanted to. This would be fun. I'm probably going to be a buyer right around here, around $28.50, $28, give or take. Put my sell order in at 27, but I think we're going to see a bounce in the airline stocks. Southwest fundamentally is pretty good. So I'm looking for this breakout north, which would confirm a reversal on the pattern, and I'd be looking to sell somewhere in the next couple days up in the 40s. So that would be that's my hot tip for the day.
For the airlines, can we be confident on that? Because I know my mother works for the airlines, and they said they're telling people to take voluntary leave and stuff like that. So can we be confident on those airlines?
Yeah, you always got to remember the market is forward looking. So it's always usually looking forward within the next 3 to 6 months. So when I'm looking, it usually trades 3 to 6 months ahead of what you think it will do. So I think in 6 months we're back to flying, which is why I think that's why it's going to reverse.
All right, got it.
And then personally, how many shares would you buy?
As many as it takes.
Good answer.
One